joining in with more details. She's been poring over the numbers. So, Surabhi, let's start with the basics and let's actually look at. Okay, I think we'll get Surabhi in just a bit in a minute. But what's actually worked for at least Amber and even Kaynes is that the margins have improved. The top line growth has been very, very steady and strong. And the market's really taking note of this performance. Of course, Kaynes is a recent listing, did really well even when it listed. And today the stock is literally, even volumes actually, not just prices, price and volume action on both. Look at that, over 1 million shares already so far in the day.
This is what Lata was also speaking about yesterday, right? In terms of the trade data which came out, that exports for this space have really surprised. So it's not really shocking that these stocks are flying off and they're seeing such good gains coming through. The earnings also have been very good. We're going to get Surabhi to fill us in with all of that. But in the meantime, let's also take a look at some of the auto stocks because those are some of the top gainers on the Nifty right now. Hero Motor, by the way, is the top gainer of the day right now. 1.6% higher there. You have something like an M&M, which is also at the high point of the day. So while you're definitely seeing, a lot of the stocks see some kind of slip come through, a lot of the auto stocks are moving higher. By the way, all right, so my director does tell me that Surabhi is ready right now to take us through what's really happening. We'll come back to the auto space and the markets. But Surabhi, in the meantime, we were discussing this entire electronics manufacturing space. The stocks are doing very well. Take us through what just the Q4 numbers have been like first.
Yeah, that's right. So Amber and Kaynes both have reported their numbers yesterday and both have reported a phenomenal set of numbers. For Amber, the revenues were up 55%, the EBITDA was up 62%, the margins have been expanded by 30 basis points and the PAT is up 82%. Now their RAC and the component segment, which is like 80% of their revenues, there the revenues are up 55% and the EBIT is up 54%. In the electronics segment, their revenues are up 69% and the EBIT is up 62%. And their mobility and motor division, which is a small part of their revenues, but even then, they have done really well. The revenues are up anywhere between 30 to 40%. In the mobility division, they have a strong order book of more than 700 crores. And in the motor division, their profitability is up 80% on a year-on-year basis. So strong numbers for Amber. Similarly, for Kaynes, the revenues are up 53%, the EBITDA is up 48%, the margins are at 16%, and the PAT has come in at 41 crores. Now, Kaynes, the end-user industry is mostly auto, industrials, and defense, but it is still in the EMS space. So, both of these numbers are really well.
Surabhi, since these two companies per se operate and cater to a different end segment, you've got Amber, which caters to the room ACs and other electronic, does it cater to smartphones as well? Or is it just TVs and room ACs, etc.?
Mostly it's TVs and room ACs. And,
okay.
Yeah.
All right. And Kaynes, as you pointed out, caters to the automotive segment and providing, parts for that. So it's hard to draw direct parallels, but if you could tell us what's the general reason for electronic manufacturing doing so well in India? Is it the PLI scheme? Is it the boost on localization, the thrust on exports?
So actually, it's all of those that you've mentioned, So the EMS space is really thriving, and obviously localization is a big theme. There is a boost for local manufacturing, and you can see that if, Foxconn is, going to start its manufacturing facility, and they're pumping it 8,000 crores for a greenfield manufacturing facility. Similarly, Dixon has also announced that it will almost invest 600 crores for a new manufacturing facility. So localization is a big theme over there. Exports, on the other hand, to meet the $5 trillion economy goal for Modi, export is a big push. So and that can be seen in the electronics exports number as well, which were up 26% for the month of April. And just to alert, like 30% of Kaynes revenues come from the export segment as well. So that is another reason why probably Kaynes is doing better. And the third thing which is working in the favor of EMS space is there are no regulatory or, proprietary barriers when it comes to contract manufacturing or own design manufacturing. So you can see a lot of new entrants in this space as well. Avalon, Kaynes and Syrma SGS all have been listed in the last 1 year, and all of these players are doing pretty well. So I think the no regulatory barriers is also another trigger for the EMS space.
Kaynes, the stock, by the way, since Surabhi was speaking, just check the, from the time of listing, stock was around 700. Today it's 1136. So Kaynes has had a remarkable run. It's been a phenomenal listing as well. But the others, Amber and Dixon, in the last 1 year, these stocks have fallen far more than the market. In fact, if you look at the stock price performance, Amber is down 22-23% in the last 1 year. Dixon's also down 15-16%. So just in terms of price action, the market's been a little disenchanted, which actually gets us to the last question, Surabhi. I mean, what are the valuations looking like? Maybe today's excitement can be explained with the fact that the stocks haven't had a very good run in the last couple of months, right?
Yeah, that's right. So let's start with Amber first. You know, after today's rally, it's trading at 45 times PE. But in March 23, their EPS was 47. And for Haitong estimates that by March 25, which is FY25, they estimate an EPS of 107, which is still a 50% compounded growth rate, which is less when you compare it to the newly listed players. Haitong estimates anywhere between 70 to 80% compounded growth rate on EPS for the newly listed players. So Keynes, as you said, has seen a 50% rally in the last 6 months, and their PE is at 72 times after today's rally, much less than the older players like Amber and Dixon. And in Dixon, you know, the stock has seen some weakness in the last 6 months. It's down about 32%, and that is largely because the management has revised its FY23 guidance twice in FY23 itself. You know, they revised it downwards from, say, 15,000 odd crores to 12,200 crores. So that has been the reason for the weakness in Dixon. But even then, you know, analyst estimates a 50% upside in their EPS from their FY22 levels. So currently it's at 32 rupees. They expect anywhere between 100 to 110 rupees EPS. So, but amongst all the listed players, I think the newly listed players are trading at fairly expensive valuations when you compare it to Amber and Dixon.
Okay, right now only two of the companies have reported numbers. That's Amber and Keynes. We're still awaiting numbers from Dixon, Sirma, SGS, and there is also a new company, Avalon Tech, that also operates in the EMS space. But Surabhi, thank you very much for putting sense into these companies, the numbers, the triggers, the valuations, and how the stock performs.